it time to buy the dip on Tesla, or is there a potential price target that I have in mind for where Tesla really becomes a more juicy entry point? Let's talk about that in this video. Quick reminder, we are going on an 8-day roadshow, so if you want to learn more about my house hack real estate startup, you can go to househack.com/2024 or just press the investor tab at the top, and you'll see a few things here. You'll see the free house hack roadshow you can RSVP for. Make sure you RSVP for this so we know how many people to anticipate. You could get your accredited investor letter, download our investor presentation, or the sales PPM here. So check that out, househack.com. You could just go to the main website if you wanted to, and then press the little investor tab to get there. That's househack.com. Okay, let's talk Tesla. So obviously there are a lot of things to cover here. Let's just keep it straight. Earnings are tomorrow for Tesla. This is a big deal. And right now Tesla is trading at about a 50.7 PE ratio, with earnings estimates for the year sitting at about $2.76. With that kind of valuation, we should be growing EPS at about 35%. Which actually, given that current forecasts are that we're only going to grow EPS by about 27%, the downside to the stock, I think, based on just this valuation metric, is probably $123. That's probably where we go down to if we actually want to sit at an accurate level with where the valuation is, based on where its PEG ratio should be, around 1.67. So 123 is kind of a number that I'm paying attention to. But there are a lot of things, and this is what we have to talk about, there are a lot of things that could push Tesla stock up above that 123 level or below that 123 level. And a lot of it is correlated and almost solely based around deliveries. I know people get exhausted when they hear me talk about just deliveries. I know, imagine that, a manufacturing company, yes, with technology, but actually having deliveries growth. And the reason I say this is because when we jump over here to the spreadsheet, first of all, I had to go in here and I had to drop the price realization for FSD to $99. It's 18% realization for FSD at $99. Obviously, I expect it to be on the lower side because you have to offset people who already own it outright, international countries that don't yet and might not support FSD for a while. So you're really just looking at the new fleet and some existing folks. And you got to get that fleet to grow. The more we grow the fleet, the more we can actually make from FSD revs. Again, it goes back to deliveries. But what I want you to see are these price targets here for Tesla, assuming 17.5% margin, and then various different levels of FSD and robotaxi. I only start pricing in robotaxi right here at about $3.7 billion. Honestly, I think the $3.7 billion is a little, let's just say, generous for really a 2026 target, mostly because I think even if we have a limited small-scale kind of start of FSD, it probably wouldn't grow past the level of Waymo until at least 2027, 8, 9, somewhere in that trajectory. But anyway, well, we'll see when we price all these various different things in here, or various prices. We could see no FSD, no robotaxi. We should be trading around $163 if we can get to that 327 EPS by 2026. So that'd be a 167 price target going forward. Given that the current price is about 140, that actually gives us positive growth again, about a return of about 5.9% per year going forward. So now that the price is no longer in the 170s and we're at 140, we're actually getting consistently positive numbers now across the board, as long as we can forecast that, yes, we don't need FSD or robotaxi. We just need to get to those 2.5 million deliveries, and we got to get back to growth. Keep in mind, my earnings growth target is about 30%. 30 to 35%, that's where you want to be. That enables the 60 over here. Now, if we're only going to be at 20% growth, you're going to see these numbers fall substantially, and then you go right back to negative. You could see literally we go from a price target in 2026 of 109, or we go to 127 if we include 18% FSD. If we include some robotaxi, we go to 140. And if we can get from that, that should be 2.5 million vehicles. There we go, 2.5 million vehicles. If we can get to 3.1 million vehicles, we can get up to 166. But what we really need is growth of earnings, and deliveries drive that. At least for right now, deliveries drive that massively. Because again, the more deliveries we get, the more we can enhance the level of FSD revenue we're getting, and likely the trust for robotaxi and the expansion of that network, more deliveries wins across the board. I'll just show you this on the extreme here. We go over here, 166 on the high side for 2026 at 20% growth. If I jump this up to 4 million vehicles, you'll see a nice move over here where we actually go to $206. So I pull that back out and I go right back to where we were, which was the 3.1 level. 3.1 level, I mean, you're looking at a huge difference here, $40 price difference, 166 to 206. Deliveries drive this. That's just an extra 900,000 vehicles. And I realize that it's not just that it's an auto company, but it's the fact that the more autos we deliver, the more FSD we get. And again, the more trust we get on the robotaxi system, because the more data it collects, the more practice it gets. Everything wins from more production. The problem is we're probably not going to hear anything optimistic in the earnings call tomorrow about actually building out Giga Mexico. Giga Mexico was supposed to undergo a substantial expansion thanks to the Model 2 ramp or the compact car ramp. Well, and that's also based on an interview that Elon Musk did with Sandy Munro, where he suggested, hey, he's working on the line almost every single week, and he sees massive progress on the new production line, and that production line will get sampled in Austin first, and then it'll go to Giga Mexico. Well, the fact that now Giga Mexico is on the back burner, we're delaying potential expansion to other countries like India, or delaying trips over there for whatever reason, and we're not really expanding the company. We're actually going into cash preservation mode. A lot of folks are worried that deliveries are the number one thing that is going to slow us down even in the face of strengthening FSD. So obviously, that's what everybody's concerned about right now. Note, the company does feel very much to be in cash preservation mode, and that makes me a little nervous for the next topic, which would be free cash flow. We really need free cash flow to stay positive. That's operating cash, less investments like AI chips or factories, ramping Giga Texas, ramping Giga Berlin. We do not want to see negative free cash flow. That would be very bad tomorrow in earnings. And given that we're seeing such cost cutting here in April, which is in Q2, there are some people who believe we're going to get a very disgusting free cash flow negative surprise next, in the earnings call tomorrow. And that would be very bad. I would not cheer that at all. I would not look forward to that because I think it would be very bad to the stock or for the stock and for the company, because it potentially begets the question of, okay, is Tesla going to have to raise money? That you don't want to hear about. You want to hear companies doing buybacks when the stock is falling, not trying to raise money when the stock is falling, right? So this would be an issue. Now, we did just see, obviously, quite a few cash preservation plays from Elon. Elon, for example, is expected to have laid off about 20,000 individuals in the latest round of cost cuts. Given that this is a company of 140,000, you're probably looking at about 14.2%, 14.3% across the board. And we just lost the ad team, which you might remember, but it was last year right around this time that at the shareholder meeting, I asked Elon Musk, why don't you promote these wonderful things that Tesla does, whether it's the special safety that other cars aren't doing or the features that other cars aren't doing? Why don't you promote these things and tell everybody else about this by advertising? And he responded to me and said, well, we'll try a little advertising and give it a shot. Yet today he cut the entire ad team, and one of his complaints was that the ads felt too generic, like they were too, like they could have been basically any car, and that they didn't specifically speak to the features of Tesla, which is actually what originally Elon agreed to trying advertising on, is speaking to the features of Tesla specifically, and not trying to be generic like a car company. One of the way, and here you can see that tweet. The ads were far too generic, could have been any car company. So it's unfortunate. The vision was sort of distorted a bit. What I actually did last year is I came up with a strategy for Tesla ads, and we actually made a few Tesla ads as samples. And what we did is we really wanted to contrast Tesla to other vehicles hey, here's how we compare to the RAV4. We basically took some inspiration from I'm a Mac and I'm a PC, and we just ran some ads totally for free, posted them to show people, hey, look, here's how we would do it. And it was like, I'm a Tesla, I'm a RAV4, and we would compare the features and the pricing and the specs and try to find a fun way to really educate people, just like the old I'm a Mac versus I'm a PC ads. I thought that was a great strategy, and I think that would have been a great direction for them to go. Of course, I'm not there running the company or a part of the company, so all I could do is sort of give suggestions, and then if people will take advantage of those, great. If they don't, no problem. So the second thing that I really thought Tesla needed was a spokesperson that was not Elon. Somebody that, Elon's divisive. We know that. A lot of people absolutely love Elon. The odds are most people watching this video really like Elon. They respect Elon, but maybe some people agree he's a little one-sided in his political opinions. We've already talked about this before. Other analysts say that, oh, well, for every person Elon pisses off, he'll find a new a new follower. The problem with that idea is it's not necessarily true, because you have to weight the odds that those people are going to buy a Tesla, right? So let me just be blunt here. If you lose a Democrat and you gain a Republican, did you net grow, stay the same, or lose? And my opinion is you have to weigh the odds of a Democrat buying an EV versus a Republican buying an EV. I'm not saying there aren't Republicans who don't own EVs. I know there are. I'm just saying if a Republican is only 20% likely to buy an EV and a Democrat is 80% likely to buy an EV, well, then if I lose 10 Democrats, then I'm down 8 potential buyers. And I gain 10 Republicans, then I'm up 2 potential buyers. So I'm now at a net loss of 6. So even though, hey, I lost 10 followers and I gained 10 followers, you actually net lost 6 buyers, right? So you have to consider statistics when people are actively talking against potentially your political persuasion. It's very difficult, by the way, to be neutral on the internet. Most people will fall in the trap of just only going either I'm only going to, tweet or follow or talk about the left. I'm only going to tweet or follow or talk about the right. I think I take a very challenged approach by going as much in the middle as possible. Everybody tries to guess my biases or whatever. It doesn't really matter. I really try my best to just stay in the middle and try to stay out of picking sides in politics. Mostly because even though you could win really well just leaning in on one side, that's just not me. I don't do that. I like to see both sides. So anyway. So this is an interesting comment about the ads. Another thing, regarding this sort of spokesperson for Tesla, I think Tesla really needs somebody like a Taylor Swift or Ryan Reynolds or somebody that's the face to do that sort of I'm a Mac versus I'm a PC style ad. And really, I think that would be so great, because then you would finally make the face of Tesla not Elon, which we know it's so connected. It's done so well under Elon, but not the last few years. It's not been good, right? So I wonder if there's a way you could get a neutral face, especially someone like a Taylor Swift, that could make this a lot easier. This, by the way, was the ad that we did. We won't play it here, but we did Tesla's first advertisement. I'm a Tesla versus I'm a RAV4. And so we talked about the benefits and the pricing and the differences between the two. People really seem to enjoy it and like it. But anyway, so, having a neutral person like that I think would be possible. I also think it would be very likely to, think about Taylor Swift. She's got these concerts going all across the world. Who's sponsoring now? I think it's Capital One sponsors everything. Capital One's on all the mugs, all the banners, all the tickets, the badges, everything. And that's a very expensive ad campaign, but, from our point of view, but even if it was hundreds of millions of dollars, this could potentially be some of the most effective ads, especially since some argue that Swift fans lean more left, which is your demo anyway. And we know she's willing to do ads. She signed her contract with FTX, for example. She was going to promote FTX at all her concerts, branding, signage, or whatever. Sam Bankman-Fried just didn't sign her contract back, countersign it until the company fell apart. So it shows you just how broad that company's influence was. But boy, it doesn't sound like we're going in that direction, because instead we're going into cash preservation. Now, this is a little bit concerning because yesterday I discussed how I made this analogy, and I didn't mean to compare it to Tesla at all, but I made this analogy where I said, there's the story of the father who's running a store off a freeway, and they have a big billboard on the freeway, and the college-educated son says, "Father, we're going into a recession, you better cut spending." And so the father cuts the spending by removing the billboard, and sure enough, the business fails because your revenues collapse, and then they have to lay people off and whatever. Somebody made a comment this morning. They were like, maybe the father was Tesla. Maybe the father was Elon Musk. Elon, daddy, we're going into a recession. Oh! And he's been of this mindset that the Federal Reserve has really had the boot on the neck of the economy for a long time, which makes sense. Interest rate sensitive stock. So you have this risk factor that Elon's going in cash preservation mode, which is, okay, maybe we'll spend on AI, but let's cut expenses on Giga Mexico, or creating a new Giga, or even expanding some of the lines in Berlin or Texas. Let's cut staff, let's cut advertising, cut to survive what could end up being a recession. I'm of the mindset that if we have a bad earnings week this week, we can have a self-fulfilling recession that comes. And so from one point of view, he's actually doing a smart thing. He's preserving cash in the face of a potential recession, which is very scary, because if you go into a recession, that's how companies can go bankrupt. And so I don't think Tesla is going to go bankrupt, but cash preservation is not what people want to hear about if there's not a recession. They want to hear growth. And I don't think there's a growth story to be heard until we get through this hard time. And people are just now going to start waking up again to the idea that the Federal Reserve's interest rate trajectory is probably a miss. We've been rallying until about the middle of March, beginning of April, in markets across the board, despite the fact that rate cut bets are coming down. Well, the Fed's going to matter again. I mean, coming May 1st, we have JPOW again. May 1st, by the way, is also the deadline to invest in househack. Read the solicitation at househack.com/2024. And make sure you don't ACH us. A few of y'all have been ACHing us, and that doesn't work because we don't get enough information. So then they have to bounce back, and then it takes multiple days, and you have to send a wire anyway. You got a wire. Anyway, so thank you, though, for investing. So, deliveries are obviously an issue. Margin, a lot of people, Wall Street seems to think we're going to be in the 16, 17 range. In the course member live stream this morning, we wrote sort of a spreadsheet on what's bullish, what's bearish, and some ideas around Tesla. One of the big things that we wrote down was, hey, we want to see margins over the 15 handle, but we did just get Troy Teslike suggest that he thinks margins are going to come in at 14.6, which is not great. That would be very, very bad. And that's mostly because margins drive into free cash flow. So you really want to see positive free cash flow, margin over 15%, and you want to hear some positive growth commentary. Unfortunately, we're probably only going to get robotaxi commentary, which I know a lot of people are very excited about robotaxi, and even Ed Ludlow's like, hey, look, they're running some really cool neural nets in New York that have really good progress, and the progress is incredible. And that, even Elon Musk mentioned on Twitter, or an X, the FSD that we see on the street is like 3 to 6 months old. So when we get a new version, it's like 3 to 6 months old. And they're on the bleeding edge of FSD. But Elon Musk said something that I thought was actually very important. And he mentioned that, yes, what you have on the street is probably 3 to 6 months old. And part of that is because when you have these new artificial intelligence models come out, you end up getting FSD that's better in certain cases, like it will have several breakthroughs, but then dozens of bugs where it performs much worse. And then it takes a few months to fix those bugs. So the problem with that is it's very challenging to continue to train these neural nets over and over again, and then you're fixing some problems, but you're creating other problems. We got to get rid of creating the other problems. Now, one of the ways you can do that is training with more data. Well, guess what? That requires a larger fleet. It requires more people on FSD. And guess what? It requires more computing power. Well, to stay ahead of your competitors, you're probably going to have to jump from the H100s to NVIDIA's latest chip or maybe the next generation chip pretty soon. So you're probably going to have to regularly go through these NVIDIA upgrade cycles and keep buying the latest and greatest chips. Because if Tesla, has a competitor that all of a sudden gets their hands on a good set of data, or they steal it from Tesla, the data, or, they buy it from NVIDIA or whatever, the Chinese figure it out, whatever, if somehow the data is being collected through NVIDIA's Orin chips or whatever, and that can be licensed out, and then somebody else, some other schmuck buys a bunch of Blackwell chips and starts training, well, that is a risk factor. Now, I don't think it's highly realistic because Tesla's data is so centric to the cars and specific to the cars. And so you probably have a moat there. But at some point, if you have these NVIDIA Orin chips and cameras on other cars, somebody is going to collect all of that data. And that data is going to be very, very valuable. Even if the data collector themselves doesn't use it, like a bunch of companies collect the data and then sell it and license it to some other FSD building company, that data has a lot of value. Heck, maybe even Elon Musk will sell some of the data, which would be shooting yourself in the foot because then you'd be giving away your moat. I don't think you should do that. I also wasn't the biggest fan of giving away the moat on the supercharger network because, quite frankly, now you made it acceptable to own any other EV when, quite frankly, you had such a glorious moat to only own a Tesla because the other supercharger networks suck. And now you're also kind of harming the availability of superchargers for Tesla owners because, well, now there are more people clogging the spots. You're going to have more demand before you have more infrastructure. And so you're just going to go through years of longer waits at the supercharger networks. And as a customer, I feel a little slapped in the face by that. Now, I don't really use the supercharger networks because I barely drive, which I'm grateful for. I really despise driving. But yeah, that's certainly a consideration. Now, another consideration, too, is Elon's comp plan. Now, Elon's comp plan is coming up for vote. Most of the Tesla bulls are arguing that, if Elon's comp plan is denied, then he's going to quit Tesla, and Tesla will be leaderless, and whatever. I don't think he'll quit Tesla. I think they'll just come up with a new comp plan, which honestly at this point is a very real reality given that Tesla's market cap's sitting around 450 right here, 450 billion. You've already lost the last 3 tranches of Elon's comp plan, actually the last 4 tranches over here. You're teetering on losing the 5th tranche. So a lot of people are saying, well, Elon should be paid what he's owed because this plan was, approved by 73% of shareholders. And that's fine. I'm not here to take a stance on it. I'm just here to say, and I know some people are like, Kevin, you should be advocating for the comp plan. And other people are like, oh, Elon shouldn't get the comp plan. That's free money. The judge said it wasn't fair. I'm not taking a position on this. I don't think it's my obligation to advocate for or against this. I think it's really up to you to determine this. I think that people should read the judge's decision. They should read what the comp plan was, and then they should make their own decision, right? I actually went through the judge's decision. Elon Musk, meet Kevin, 50 billion compensation plan judge. I did a whole video breaking it down. Yeah, here it is. It's a 53-minute long video. We did this right here. It's Elon loses $55 billion pay package. Tesla stock down. You can see Tesla stock was down over here at 187, so quite a bit higher. This was a couple months ago. And I actually went through the comp plan and explained the different aspects of that lawsuit so you can understand what actually is in there. And you can see some live commentary as well. You can see some of my theses on this. So this is, I think a pretty good video to watch. And then you could see sort of the thoughts and questions that I have in terms of realities if you're interested in that. I don't think it's worth regurgitating here because it would just take too long. I've already spent enough time on it. So then, I do think EPS is expected to come in at 52 cents. Troy thinks it'll be 46 cents. Some people think it'll be a little higher. I think the biggest wild cards, honestly, for tomorrow are going to be how much does Elon Musk brag about robotaxi? How close it is? That could move the needle of the stock. I do expect that he's going to ignore commentary about deliveries and expectations for the future growth of the company, mostly because he'll probably just sort of blame Jerome Powell and then move on. But the idea of this purpose-built robotaxi instead of a $25,000 car, a lot of people are debating about this and they're freaking out about this. Some people are like, well, what if it's both, the robotaxi and the 25K car? And other people are like, no, he's only going robotaxi and he's killing the 25K car. And then other people are like, they were always the same thing. Look, I don't think it really matters what was or like what we speculate now. I think what matters most is what is. And what matters most, in my opinion, is that you do have a mass market vehicle, so you can increase deliveries, increase growth of earnings for the company, get more FSDs on the road, and therefore have more training data and promote the company's growth that way. So I'm a big fan of a cheaper car, 25K car. I'm a big fan of that. And a new 25K car, like, I'm not talking about like a used Model 3 that sells for 25K. I'm talking about a new compact car that sells in that 25K range. I think that's a game changer for Tesla, and that was priced into Tesla. And I think that should be, if it's built on the same platform as Robotaxi, fantastic. But it should, they should both exist. If that idea is dead, and basically the new model of vehicle is only the Robotaxi, well, now we have to kick the can down the road on earnings for multiple years. And as a very long-term investor, it doesn't matter. But as a short-term investor, is it going to hurt? Yeah. The more Elon talks tomorrow about, we're not focused on a new vehicle right now. We're just focused on all in on Robotaxi. And, I think he'll say something like, today is not the day for product announcements. Come back on August 8th. That's because you really want to kick the hope can down the road so the stock doesn't completely sell off, because if he gave everything today, the stock would just tank even more, or on earnings call. But, it would be nice to see what's going on with Giga Mexico, what's going on with manufacturing in Giga Texas, and are we actually still trying to grow production, or are we just trying to fill up that demand pool right now? Right now, it seems to be fill up the demand pool. So what we're seeing are interest rate subsidies and price cuts again, which that's why the stock's down 3.5% today, because we had this price increase on April 1st. People were like, yay, the bottom for margin is in. And then we get a $2,000 price cut, which, there were a couple $1,000 price increases. So you're basically the same. But again, it goes to show, wow, okay, back to the old method. No advertising and no price increases. Instead, it's price cuts. Now, you do have some people on Twitter or X that are like, well, what a surprise. Twitter or Tesla starts advertising and they have the worst quarter ever. I don't think that's one and the same. Like, I don't think you can argue that because they advertised, their delivery sucked even more. I don't think that's realistic. I mean, unless their advertising was like offensive, right? Like, I think the biggest driver is really just, you have this big pull forward of people buying electric vehicles when interest rates are low, and there are some people left over who hadn't bought yet, and now they've bought, and now you're just running out of buyers at these high interest rates. So I think that's why Tesla is trying to focus on getting interest rates down by doing interest rate buy downs. But again, that's expensive. That costs Tesla money. So they're just sort of reallocating where they're trying to spend their money. Everybody can argue about the ads, whether they were good or bad or this, that, or the other. The one thing we can say, I think, with certainty is they're in cash preservation mode. And again, for a growth company, it's not great. You're not a growth company when you're in cash preservation mode. And so hopefully that long-term changes. And I'm very optimistic for Tesla in the very long term. But short term, I'm still bearish. I thought I would have rebought by now, honestly, but the news just keeps getting worse. So I'm curious to see what will happen with earnings. I do think with earnings, I mean, it almost feels like you're going to have a big move up or a big move down, which kind of makes spreads seem somewhat interesting. But I don't know. Now, what I do know is, with certainty, tomorrow we will be beginning the Investor Roadshow for househack. So if you want to learn more and if you've got questions, you're an accredited investor, make sure you get your accredited investor letter from InvestReady. The deadline to invest is May 1st. That is coming up very soon. That's JPOW Day. It's next week. So in other words, we're closing this round in a week. and we're doing a little roadshow. You could also download our investor presentation. This is obviously very different from investing in stocks. It's investing in a private real estate company that we think can be bigger than Open Door, Invitation Homes, American Homes for Rent, Roof Stock, Fundrise, all of that. We think we could blow it all out of the water. No guarantees, obviously, so read the risk factors and the disclosures. And thank you so much for watching. We'll see you in the next one, and I will be covering Tesla earnings live, so we'll see you there. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than househack, nor am I presently acting as a market maker. Make sure if you're considering investing in househack to always read the PPM at househack.com.